access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richey. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last 2 years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Good afternoon, everybody. We got Fed Day and we got market with some volatility to kick things off. Right now, S&Ps are almost flat to the tick, but you see the volatility from out of the gate higher this morning. Right now, market's just creeping into the red. Chairman Powell still talking on that press conference. We were just airing live right here on TFNN. S&P's negative by 1 point right now. But boy, that was quite a 40-point sell-off in the last 20 minutes or so. We got 53 minutes left to go of trading in the day, and we got S&P's negative by 2. We'll jump to the headlines first before we go through the markets. Fed officials hold rates again. Still see 2 cuts by the end of this year. You go out to 2026, they actually pull 1 cut off on the dot plot. Same thing if you go out to 2027 as well. Interestingly enough, traders now pricing in actually a 74% chance that the Fed is going to lower rates by September. He's talking about tariffs, saying we're going to learn a lot about tariffs throughout the summer. They're a little bit hesitant to move. They keep rates. The overnight lending rate, 4.25% to 4.5% is where we stay. So we'll see where we go, but markets right where we were at the opening bell this morning. That's where you trade down to, and we got the S&P's negative by 1. NASDAQ 100, pretty similar action. We trade down to the lows of this morning. We're trading down 14 points at 21,942. Dow barely in the red right now by 14, 42,539. And you have the Russell in positive territory, not pulling back to where we were this morning. The Russell right now positive by 12 at 2129. We jump to yields on the all-important Fed Day. Always interesting. The first move is not always the move that lasts. Originally, you get a spike higher, but yeah, right now we got lower price, higher yield coming at you on a 10-year right now. On a 10-year, we're talking about 4.4%. The yield on the 10-year, we jump over to the dollar right now. There you go. On higher yield, dollar strength, how about 99? 99 coming at you on the dollar. We got a nice bounce going. We got a nice double bottom. We bounced from 97.60, made less than a week ago, and right now we're in this 99 area on the dollar. As markets rolling over a bit, higher yield coming in. And yeah, with dollar strength, gold. We're pushing the lows of this morning. We're pushing the lows of last night. You back gold up on a daily basis. You have gold trading down $13 right now, or about 0.4% at 33.93. And we got the S&P's lower. You jump over to the VIX right now. Volatility index, 2061. On that volatility index, we put it back to a 5-minute. A little bit of a spike to the 21 area, but as I said, Chairman Powell, he's still talking, and right now, yeah, a little bit of a sell-off. And, you know, some of the verbiage that he has going on, okay? So, when he talks about the uncertainty, okay, we have not been through a situation like this. This is Chairman Powell talking very difficult to make assumptions, talking about tariffs, okay? That process is very hard to predict. We haven't been through a situation like this. I think we'll have to be humble about our ability to forecast it. So they are taking a very cautious approach. And there was the summer line. We feel like we will learn a great deal more over the summer on tariffs. And so that's maybe where September comes through when you're talking about it. But they're still talking about 2 cuts this year. And the farther out you go, the less it means. mean, if you think back how magnificently the Fed has changed occasionally, you start going out to 2026, 2027. Even the chairman says no one holds these rate paths with a great deal of conviction, talking about that dot plot. They have to make a choice. And I think what he's saying is, hey, we're going to learn a lot this summer, okay? And yeah, don't read too much into those dot plots when the conviction of those dot plots is very uncertain, when who knows where we're going to be 3 months from now, let alone next year, 2 years from now, etc. Nonetheless, you got markets reacting. We had a little bit of a sell-off, and we'll see how we digest the last hour of trading. We jump around to some of the Magnificent Seven. Amazon, quite a trade lower throughout the day. You push all the way higher to 218 this morning. Amazon shares right now basically flat on the session. We jump over to Apple. Yeah, give back of the gains in the market as well. Apple shares negative by 13 pennies. Microsoft just relentlessly higher. We make an all-time high on Microsoft this week. On Monday at 480.69. We're just pushing those levels right now, 478.91. Meta pushing basically flat. The market pretty calm right now. And what's so interesting is you go in, we're off tomorrow. So you have Juneteenth holiday tomorrow. Markets closed. You have to digest a Federal Reserve decision. Nothing really surprising in there. Chairman Powell is saying, hey, we don't need to cut yet. The risk is not there. We have plenty of ammunition to come with the cuts when we need to. We're going to see how this plays out. Okay, he talked about the inflationary factors. He talked about a little bit of cooling in there as well. All right. Powell says that the labor market is showing perhaps a very, very slow continued cooling, but that overall many aspects of it are at very healthy levels. And they're not ready to act just yet. And that's where they go from there. And so we get a Fed that stays put, and we'll see. Because right now, this is the 10-year we're looking at. And yeah, we are rolling over, man. You were just up to, even if you just take to where we were at noon, okay, 111.05. We're making a 5-minute, almost session lows at 110.24. As you have the 10-year rising, we jump over to the 2-year, which reacts a lot more to the Fed. And look at that move, right? Lower price, higher yield, okay, even on a 2-year basis is what you're looking at. Now, he's going to face some criticism from the president, I'm sure. You take a look at the yield curve, okay, you're higher in yield across the board. You take a look at the 2-year, actually unchanged, okay, but that's because we came into that number. But then you take a look at the 10-year, slightly higher, and we were lower is what was happening coming into those numbers. So you got higher yield, and that is putting a bid in the dollar, man, at 98.92 right now, and that's putting some weakness into currencies. You have the crude contract, silver, down 46 pennies. And yeah, we jump over to crude, and you talk about a little volatility. Look at that move on crude just now. Whew. Boy, I don't know if something's happening right now that just happened in that crude market, because that is not a Fed decision, man. Crude just in the last 5 minutes from 73.60 down to 72.32. And I imagine that's a news-driven event as you have markets back in the green right now with the S&Ps up by 8. We got volatility in this market, folks. Look at this market. All right. Look at that crude contract. Volatility at 10 a.m. and boom, we're doing it again. S&P's up by 8. Folks, stay tuned. We're coming back with our man Sean Edwards from Direction. We'll be talking some ETFs. We'll talk some markets. Always a good conversation. S&P's up by 7. It's Fed Day, folks. Don't go away. We're coming back with Sean. Stay tuned.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. Welcome back, folks. We got the S&Ps right now positive by 1 point, and you talk about a market jumping around. We got about a 20-point range just in the last 25 minutes or so, and boy, yield's going to be a driver right now as you get higher yields coming at you, but a little bit of a bounce there as well. Actually flat on the session for the 10-year, but you see the volatility from early this morning at 111.04 down to 110.24, and we got the 10-year at about 4.4%. I saw this morning, mortgage rates, lowest we've been, and you're coming down to almost 6.8%, and we'll see where we go from there. All right, folks, right now we're going to talk to our man, Sean Edwards. Sean is Vice President, Institutional ETF Strategist with Direction, and we're going to talk some markets, and I love that we do this on Wednesdays because sometimes it falls on Fed Day. We get some volatility. Sean Edwards, good afternoon.
Yes. Thanks, Tom. Thanks for having me once again. Happy to be here, and it does seem that Wednesdays bring volatility, so happy to have this conversation with you today.
As traders, and whether it's leveraged ETFs, but boy, we got some action in this market, Sean, and I know, we were talking earlier in the week about stuff coming up, and boy, if we could kick it off with the Fed, we got rates right now. Not sure if the chairman's still talking, but he was close, he may be, and the market reacting, but yields in focus, man. I know you guys have some great ETFs, but what are you seeing maybe from some of the investors, some of the ETFs that you guys have for those investors out there looking for whether it's yield-sensitive equities in this market, small caps in general. Small caps actually up 14 points to Russell today as the market's jumping around. What are you seeing over there, Sean?
Right, no, definitely. And we typically approach it and we introduced our fixed income suite, Tom, but I'm going to take a different approach because we have some other ETFs for traders that are looking to trade the swings within yields, right? So again, we know that the Fed decided to keep rates steady just due to persistent inflation, tariff uncertainty, and the robust labor market, right? They mentioned that it's possible 2 additional rate cuts on the table for 2025. So for those traders that are looking to trade around rate changes, you can look at growth and tech stocks as they're sensitive to yield changes and they present trading opportunities. And again, Direction, we provide tools for traders who are tactical that want to take advantage of short-term price swings. So as we know, when yields fall, tech and growth stocks tend to surge. And when the Fed turns hawkish, tech and growth stocks tend to retreat. So a few trading opportunities that I mentioned a little bit earlier. For those traders that want trading opportunities around tech and growth stocks, you can look at the Direction Daily Technology Bull and Bear 3X ETFs. those funds provide 3x daily exposure to the Technology Select Sector Index. So again, if you're bullish, you can look at ticker symbol TECL. If you're bearish, you can look at ticker symbol TECS. Again, tactical short-term trading tools not meant to be buy and hold investment vehicles. These are trading tools. So again, if you're looking to trade the yield changes and the Fed and interest rates, you can look at TCL and TCS. And as you mentioned a little bit earlier, Tom, the Russell 2000. If you're looking for growth names within an index, you can look at the Russell 2000. Again, small cap index. You can get exposure to that index, 3x exposure to the daily performance of that index by utilizing the Direction Daily Small Cap Bull and Bear 3x ETFs. Again, those ticker symbols are TNA if you're bullish, and if you're bearish, you can look at ticker symbol TZA. So again, trading opportunities around tech and growth as it relates to the rate policy and yield changes.
And pretty cool. I was jumping through those as you were talking about it, and of course the TNA, man, today, and the Russell's leading the way right now. TNA is up 2.3%. That's because the Russell right now is up a solid 0.8% when you got the S&Ps, NASDAQ, all of them barely in the green, but barely, somewhat. Let's talk a little bit of crude. I know you guys got some great ETFs for crude, and boy, you talk about volatility. We'll see how tensions, hoping for the best, of course, always, but boy, those tensions, man, I'm seeing headlines every day. Crude catching a little bit of a spike. Let's talk a little bit of crude if we can.
No, for sure. And as you mentioned, OPEC decisions, geopolitical tensions in the Middle East between oil-rich nations, and just changing demand are driving oil short-term price moves. So as we know, energy stocks tend to respond rapidly to swings in crude oil prices. And so with this conflict, we're seeing a disruption in production. So what does that mean for traders? There are trading opportunities for oil and gas related equities in the broader energy sector. As we all know, Direction, we're not providing direct exposure to crude oil, but we are providing exposure to oil and gas related equities. So I think a lot of the viewers on the show, Tom, are already familiar with ticker symbol Gush and Drip. So Gush and Drip provide 2x daily exposure to the S&P Oil and Gas Exploration and Production Select Industry Index. So for those traders that are looking for opportunities around oil and gas related equities, you can look at Gush and Drip. And then just to broaden out the suite, for those traders that are looking to trade energy broadly, you can look at the Direction Daily Energy Bull and Bear 2X ETFs. That's providing exposure to the Energy Select Sector Index. The ticker symbols there are ERX and ERY. If you're bullish, the energy sector, you would look at trading ERX. If you're bearish, you would look at trading ticker symbol ERY.
And those are some, man, this crude market, $73, I think, and just as you were coming on the air, Sean, we have some spikes, man, almost hitting 74, just at 310. I got my chart up here on a 5-minute basis, folks. You trade from 74 to 72.20. A lot of headline-driven news, of course, in that market going on with some volatility. And then, let's talk the general market, man, because, I know SPXL, SPXX, outstanding ETFs. I trade them all the time myself for the general market. But at an S&P at 6,050, we're seeing a lot of investors looking for a little bit of whether it's, safety, whether it's growth. But talk to me about rotations and the ETFs that you're seeing with some action out there with this type of market as well.
No, absolutely. As I always love to say, volatility presents opportunities, and 2025 hasn't been short of opportunities led by the volatility. So what we're seeing right now is a market rotating between growth and then defensive sectors due to some of the reasons we're talking about now. So when we see strong economic data, it often triggers a risk-on rally, which then prompts, if there is weak data, prompts a shift to safety. So, for example, we've talked AI before on your show. We've talked growth stocks. And now we're seeing defensive sector take the spotlight. So if you are looking to trade the broader market moves, you can look at ticker symbol SPXL, as you mentioned a little bit earlier, which provides you 3x daily exposure to the S&P 500 index. If you're looking to be bearish, you can trade ticker symbol SPXS. Again, 3x inverse exposure to the daily performance of the S&P 500 index. So again, broad market exposure. If you're bullish, you look at SPXL. If you're bearish, you would look at SPXS. And as I mentioned a little bit earlier, if you're looking for defensive sector opportunities, so those sectors that you could stand to benefit from, if in fact there is a rotation once again out of growth. You can look at, again, the healthcare sector or utilities. So a few tickers that we typically don't talk about on the show, but wanted to highlight. One in particular is Cure. That provides you exposure to the Healthcare Select Sector Index. Daily 3x bull exposure to the Healthcare Select Sector Index. And then also UTSL, which provides you 3x daily exposure to the Utility Select Sector Index. Again, tactical short-term trading tools. Just always love to introduce the many different tools that we have available for traders to take advantage of the volatility that's present in the market.
And I appreciate it. Cure. I like that one, especially in this environment, man. We look forward to talking to you next month. Sean, thanks so much. Have a great one.
You too, Tom. Have a good one.
Thanks so much. We'll be right back, folks. Stay tuned.
Trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks, and we have the volatility continue with the S&P is now negative. And yeah, the Russell, though, leading the way in positive territory, but S&P is coming down and challenging those lows of about 6,030 yet again. And always a great conversation with Sean from Direction. And folks, check out the Direction banner on the front page at TFNN. Always seems like those 9 minutes fly. He's someone, those ETFs. But was outstanding, I just want to bring up, he was talking about even the AI, right? Whether you talk about Magnificent Seven, you have in there, okay? But the AI and big data, AIBU, AIBD, they have a tremendous. And then you go into the single stock ETFs, which are just awesome. Yeah. You want to talk about, and this is what's, as traders, okay? As a trader, when you're talking about a single stock ETF, especially on a bearish side, shorting it where you're getting a multiple, okay? Whether you're talking about AAPU, AAPD, Apple, bull 2 times and bear 1 time. Okay, so you're getting the bull 2 time and the bear 1 time is what you're getting. But if you're trading an equity long, why not go into an ETF? And I know they're a sponsor, folks. I'm biased, but if you're trading an equity long on a short-term basis, okay, I would be using a leveraged ETF. Now, these are daily investment vehicles, okay? When you start holding them on a longer-term basis, the long-term gains or losses may not be reflective of the underlying. It sounds like a disclaimer, and it is, because it's important to understand that you cannot just hold these leveraged vehicles and think that on a longer term basis they're going to behave in the same way because of how they compound. Okay, and I am going to do a webinar on some point on that coming up soon, because once you understand it, it makes sense. But it's important to know, because they're great vehicles, but they are daily investment vehicles. Okay. And yeah, if you're holding them on a couple of days, the long-term performance may not be the same as the underlying, okay? But the longer you hold it, the more distortion you can have. But man, whether you're trading, AMD, Amazon, Apple, right? Boeing, Tesla, Meta. Anyway, check it out. You can always hit that banner on the front page at TFNN.com. And yeah, SPXL, SPXS, great S&P ETFs on a 3 times basis. The SPXS, when this market just goes up, man, these things just go down on the short basis. But boy, you're talking about $5. And the reason why those longer term performances don't always match the underlying is because of basically compounding. But it can go the other way as well. You got a choppy market and you're going to lose money, even on an index that stays the same. You get a trending market, okay? And the performance will actually be greater than, in this instance, 3 times the underlying. All right. Jumping back to the Fed. I'm going to scroll up a little bit. As Chairman Powell wraps up, some of the headlines. Yeah, he thinks the economy's doing fairly well. He sees a little bit, okay? Low hiring, low firing. One of the other headlines, pretty good labor market out there, okay? U.S. defied all kinds of forecasts for it to weaken, he says. Eventually it will, but we do not see signs of it now. Strong words, okay? And this is where you're seeing some of that market reaction. When you see that type of just direct nature, they're not seeing a weakening. He thinks they're still restrictive, but they are not seeing a weakening, period. All right, what else do we have going on in this market? A lot of Fed out there. And of course, a lot of geopolitical risk rising as well. Talking about what changed in the statement, okay? The unemployment rate remains low, okay? Has stabilized at a low level in recent months. Yeah, they took out stabilize, okay? So there's that in there for sure. Uncertainty about economic outlook, diminished but remains elevated, okay? The uncertainty, and he talked about this, right? The last time that they were meeting, They didn't know if those rates were going to stick that the president was talking about. Seems like they're going to be a little bit lower going forward. That's part of the reason that they're trying to wait in the same way, though, right? Things are changing so dramatically, trying to price in the impact, potentially, of some of those. Okay. Yeah, I got to find all the articles here. So, yeah, here it is. This is the one I wanted. Okay. And check this one out. We've talked about this before, but this is on the heels of, so Chase comes out with a credit card now that's $795 a year. They're going to charge you $800 a year, and yeah, if you max out those benefits, you're able to make that $800 back. A lot of people might not max it out, but that's the deal. JP Morgan Chase, $795. That's a 45% jump, okay? American Express is announcing a huge update to their Platinum card with new benefits that is going to get an increase from that $695 card, okay? These cards do come with tremendous benefits. I mean, right away, you're getting Uber, I think it is, for $15 on the Amex Platinum. You're getting streaming that's kicked back to you. You get, what is it, Clear getting through the airport. But the bottom line is, it's all about servicing the higher earners. And can you blame them? How about consumer spending by share of where you are? Look at the rise, man, from 1995. It's just going up, and unfortunately, everybody else. Now, this is a percentage basis, okay, because the pie is growing on the top 10%. And yeah, why not be servicing? I was listening to the CEO of Marriott coming on recently, and he was talking about, and that was on Bloomberg, that they're seeing an insatiable level of demand at the top end of the earners. And that's what they're leaning into. Look at that chart from Marriott, right? That is a strong chart, man. You get some bottom at the lows. Let's put it back on a weekly here. Let's take off these. Yeah, we had a little bit of strength to the downside there last week. We're going to get a shortened trading week this week. Volume's a little bit light. But yeah, insatiable level of demand from the high earners, and you look at a chart like that, and that's where it's going. And so even the banks in the same way. 90% of premium cardholders said they would accept a $100 increase in annual fees even without additional benefits. Well, tell those 90% to wake up. No. But you see, talk about complacency, right? Talk about inelasticity, right? You're allowed to change the price by $150 to $100, and 9 out of 10 people aren't going to blink. And Amex is a big one as well. That Platinum card for $695 does have a tremendous amount, but then what happens, right? They get you into the ecosystem, and they go from there. Pretty remarkable. $800 to have access to a credit card. But then you get the benefits, and boy, if you max them out, it's a huge deal. But it's also, make sure you can pay off that credit card debt. That's the other part of that. Most of those earners on those cards, you're paying $800 for a credit card. You better be paying it off if you're paying for that $800 for the right to use it. That's for sure. S&P's up by 4, folks. NASDAQ 100 up by 24. We got 22 minutes left to go in trading. Don't go away. Be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back. We have the S&Ps up by 3, NASDAQ 100 up by 20, the Russell, as I mentioned, leading the way up by 12, and how about Coinbase? Up by 17% today after they launched Coinbase Payments, a new stablecoin-based payment infrastructure aimed at streamlining global e-commerce transactions. It's built on the USDC, that's a stablecoin pegged to the US dollar. Now this is already integrated with Shopify. So Shopify merchants, TFNN uses Shopify. We're not accepting that yet. I got to dig into it. I don't think we are. It'd be amazing. No, we're not. There's no extra setup or crypto expertise, and you're going to have millions of merchants can take USDC, the stablecoin, instantly. And man, you're talking about an acceleration, man. Check this out. So what are we pushing now? $75 billion market cap. We're coming up to the highs. Let's back this up. That's a daily. Okay, we got highs last year of 350, and yeah, you're going to make a run, man. And boy, look how we're getting over this number, though, on a weekly basis. You back it up to the daily, that huge acceleration from May 16th. What was that, getting added to this S&P, I believe? Here, follow-up on the regulations. You know, you take a look at this, though. You're flying above this bar in dramatically lighter volume, even on a average basis for a 4-day trading week. Now look at this. Look at this volume bar you're trading into on the election. Whew. All right. The momentum train is running on Coinbase. So stepping in front of it's always an issue. But if you're in this thing, you know, this is going to face some resistance here. You're coming into the bar from November 11th when you did 130 million shares. And that was a huge acceleration, actually more volume than the week that was the actual election week. You had follow through. And you're bumping into an area where you topped out on lighter volume. And you're going to do it again. As in, this is not going to be the volume. On a daily basis, yeah, you're getting a spike. But not to the likes of some of these bars that had much less price spread, right? Huge volume, and you weren't up that type of degree, but hey. So, in part of this news bit I'm reading, which is just off the Thinkorswim platform, okay, talking about Coinbase, one of the things they mention in here is that $30 trillion in stablecoins is the number. Let's see if I can get it. Where is it? And they have stablecoin regulations going through. Yeah, stablecoins processed $30 trillion in settlements last year. And Coinbase is is positioning themselves at the center of the shift. I'm probably reading you a PR announcement from Coinbase itself, for what it's worth. But this is the details of what's sending the stock higher by almost 18% today, man. $30 trillion. They want a piece of it. It's going to matter what's in that genius bill in terms of for stablecoins, and that's guiding and establishing national innovation for U.S. Stablecoins Act. Well, if everybody's going to be taking stablecoins, we better make sure that they're regulated in a way that that stablecoin is actually backed or pegged to the U.S. dollar in a meaningful way. How is it pegged in those... as we know, nonetheless. You jump over to Bitcoin. Down $700, no reaction there. Be interesting to see how Bitcoin reacts if stablecoins become something that is a remarkable way to just be able to transact any type of business online. And yeah, I'll tell you, I've shared this story before, okay? But I've played a tremendous amount of poker in my time. I play some time online. It's completely unregulated still. In Florida, you can't play online poker at all. We have plenty of online gambling for Hard Rock Bet. Hopefully we'll get there at some point. You can gamble on horses anywhere you want. They have a special exemption, horse betting. You can bet with your credit card, lose all your money in horse betting. But online poker, basically the way they operate it is offshore unregulated poker sites. Since 2011, 14 years, those big sites got shut down. PokerStars and Full Tilt. Early on in the heyday, all right, and I'm going back to, I think, 2017, 2019 even, I remember that I began to experiment that sites had begun with crypto. And I was able to, okay, purchase crypto on Coinbase, okay, and I purchased Bitcoin. And I'll find my transaction history again. I just forget what year it is, but the transaction history is there. And, I always did well in poker, but I did not do as well as if I had just taken that Bitcoin and kept it in Bitcoin and Coinbase, because I think Bitcoin at the time was between $2,000 and $5,000 that year. And this is where I always say, listen to yourself to a certain degree, because I remember that the poker site said, well, we trade with Bitcoin, basically. So, okay, that's worth taking a flyer. And anything I put on those sites, you're going to lose. That's the way you approach it, okay? It's mostly entertainment when you're playing on those, and maybe if I build up a bankroll on an unregulated site, I'll let it run a little bit. But it's completely unregulated. The poker site in the, whether it's the Dominican Republic, they can just shut down instantly, and good luck ever getting the money back and chasing an unregulated poker site based in the Dominican Republic, operating business in Bitcoin, and they shut down, right? That money's gone. So you put $100 in, you play for some activity, some joy, you play $5 tournaments, $2 tournaments, right? What's the worst thing that can happen? You lose $100. But I remember, I put Bitcoin in, I bought Bitcoin on Coinbase, I transferred that Bitcoin to, it was Bodog at the time, Bodog was a big player at the time, they still are. Sent it to Bodog, and literally within, 2 minutes of buying Bitcoin, sending it to the poker site, they take that Bitcoin, and what they do is they take the Bitcoin and they would transfer it right back into dollars in your poker site. So I would really have no exposure to the price of Bitcoin, right? I'd buy the Bitcoin, I'd tell them how much I'm buying for a $100 deposit, they tell me how much to buy and where to send it, I send it there, they take the Bitcoin, they put $100 in your account. That was 8 years ago, and I remember telling my dad, this is crazy. You can imagine, I bought Bitcoin, and within 100 seconds, I had purchased Bitcoin, shipped it off to probably a Dominican Republic or who knows where in the world. Okay, Isle of Man, I don't think so anymore. It's more Dominican Republic. There's a lot in there. And I had money within 2 minutes. And so, yeah, there's no reason why, keep that in mind as this goes forward, because that is where everything is going. This whole deal where you send somebody money and a bank needs to process an ACH that takes a day, or they have to process a wire that they charge you $25 for to send it to another bank account. I mean, I collect all the rent right now that I put in that for homes, Venmo or Zelle. That's it. And it's all legal. It's all reported. It's all through Venmo. It's all through Zelle. I send them, I pay lawn guys, Venmo, Zelle. There's no way that that's not coming down the line. All right, we check in on yields as the market hangs in positive territory. The 10-year right now, basically flat. S&P's up by 4. One more segment, folks. Don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. Continuing that look at Coinbase. So, the second part of this, which is remarkable, is they ink a deal to allow that stable coin to be used as collateral. Talking about building everything on everything. It better be backed up by US dollars. How do you peg it to a US dollar when you're using it as collateral and it's leveraged and it's pegged to that dollar? And we'll see. But Coinbase Derivatives is partnering with a clearinghouse to work with regulators on what it expects to be the first regulated use of USDC as collateral, okay? And Coinbase owns a minority stake in the issuer behind that stablecoin. And that stablecoin has a market cap of $61.5 billion. I imagine that's going to grow if all this stuff starts going through. And yeah, that follows the launch of the stablecoin payment service for e-commerce, and they kick it off, man, with Shopify in there as well. Yeah. They're targeting those platforms, Shopify, eBay, and the likes. Small to medium-sized businesses to say, hey, you want to play with U.S. stablecoin? Pay with U.S. stablecoin. We'll take it, man. All right. We take a look at this market as we roll over a bit to red, coming into the closing bell. Now remember, we're closed for Juneteenth tomorrow, so we'll be off. Market closed. Interesting. You come back for Friday. We're getting some selling. We got 3 minutes left to go in the day, and the market's only about 5 points away from session lows right now. We just traded off by 15 points from where we were just about 10 minutes ago. And on a volume basis on the daily, you take a look at the volume. We'll get some volume at the close, but nothing too impressive. S&P's off by 2. Russell in the positive, and we got yields climbing a bit. Got to update that one. But nothing too substantial. Yields right back to where we were at about 6 a.m. this morning as the market digests Fed Day. Ho-hum as we go. Not Coinbase. Folks, thanks so much for joining me. Hey, listen, have a great day off tomorrow. Have a safe one. We'll see you back here on Friday morning, 9 o'clock. Have a great one, folks.